And I would like to introduce a new or another concept, which is the continuous transaction control. So the continuous transaction control is basically when the tax authority requires companies to send some data to the tax authority, either before the creation of the invoice or after the creation of the invoice. And you can see in the table below that I just put together a couple of examples from the various tax authorities. When you issue an invoice as a company, how the tax authority relates to e-invoicing or the continuous transaction controls. So some countries push the B2B invoicing, and they rather focus on the actual invoice creation process and invoice receipt process on both sides. And the tax authorities sometimes are involved in the delivery process, so the messaging process between the sender and the buyer, seller and the buyer company. Some countries choose to stay out of the B2B relations. They just want to capture some of the data that is important for them to decrease the VAT gap. So you can see that there are and there will be different approaches from the tax authorities, but in the end, what is very important that there is structured data, structured invoice data, and the tax authorities will want to have access to this structured data to decrease the VAT gap and to motivate the digitalization of the economies. And the businesses will make investments to comply, because it requires additional compliance tasks and IT investments for both the SME companies and corporate companies to do this. But in the end, it will decrease the costs for the companies, and it can help automate the processes in terms of the financial administration, the tax processes, and also it can help with the working capital management for the company. And with this investment part, we see a huge space for banks to, especially in the SME space, but also in the corporate market, where banks can define products where they can help with the digitalization of the companies and help them with the tax compliance as well.